Good afternoon and thanks for joining us. I'm Holly and you're watching 𝐊𝐶𝐞 TV live from Sydney. This is the last show of the day, the last trade. And there's no better way to wind down the day than with today's market close commentary. So let's dive straight in. Well, the Australian share market ended higher for the second straight session today amid broad-based buying. The growth-driven tech stocks witnessed a strong rally, tracking overnight gains in US counterpart NASDAQ, as easing concerns over rate hikes boosted investor sentiment. The market also witnessed stock-specific movement at some major companies like Mesoblast, IGO, Bubs Australia, Harvey Norman, Cettire, Splitit, Resimac and others as they released their earnings reports today. The ASX 200 closed 30.40 points or 0.41% higher today, and during the day's trade, the index gained as much as 0.7% to hit an intraday high. The market breadth, indicating the overall strength of the market, was strong as 9 of 11 sectors ended in the green zone. The IT sector emerged as the best performer with a 2% gain, followed by industrial, which rose 1.4%. In the tech space, buy now, pay later giants Afterpay, aerial mapping firm Nearmap, software firm Appen, WiseTech Global, and network operator Megaport were among the top gainers. Among others, consumer staples, healthcare, and AREIT ended with over 1% in gains. Meanwhile, the energy sector was the worst performer with a 1.1% loss, followed by utilities, which settled 0.9% lower. ASX-listed energy stocks witnessed selling pressure despite a rise in crude oil prices. Index heavyweights Woodside Petroleum, Beach Energy, Ampol and Oil Search all ended lower. Brent crude oil futures edged higher as the US Gulf Coast crude oil assets, including upstream, midstream and downstream assets, are yet to be recommenced after the Hurricane Ida hit the region. The price rise was also attributed to a power hurricane plowed through the Gulf of Mexico, forcing shutdowns of hundreds of offshore oil platforms. With that in mind, let's shift our focus now to the top gainers and losers of the day. Global biopharmaceutical firm Clinuvel Pharmaceuticals topped the gainers chart by rising a whopping 9.9%. Some of the other notable gainers were software company Appen and tech firm WiseTech Global. Meanwhile, biotech firm Mesoblast emerged as the top laggard with a 15.4% loss. Some of the other worst performers were professional services firm Worley and gold miner Regis Resources. Moving on now, let's focus on the shares that hogged the limelight today. Well, shares of Aussie online bookmaker PointsBet declined as much as 3.6% to $9.84 after it reported disappointing earnings. The company's loss rose more than 4 times as compared to the prior year, despite revenue more than doubling. The company's loss widened for the financial year ending June 30th, and it was dented by higher marketing expenditure. Revenue jumped 159%, the company says, as it was supported by growth in the Australian and US businesses. And shares of biotech researcher Mesoblast tumbled 14.1% to touch an intraday low of $1.70 on disappointing earnings. The company's net loss widened in the financial year 21, and sales revenue dropped by 77%. Meanwhile, buy now, pay later firm Splitit Payments declined 1.1% to 0.445 cents by lunchtime, as investors resorted to profit booking post-earnings report. The tech stocks opened higher and gained as much as 5.5% on robust earnings for the ASX months ending June 30. The company's merchant sales volume surged 94% in the first half of the year, while gross revenue rose 79.7%. Total merchants rose 167% to 2,800, and total shoppers were up 83% to just over 550,000. During the half year, Split inked a $150 million US 3-year receivables funding facility with Goldman Sachs Bank USA to expand its business. This new facility has double the size of Split's funding capacity. And in a separate development, the company also announced about the Chief Executive Officer change. The current CEO, Brad Patterson, has stepped down and John Harper has been appointed as interim CEO with effective immediately. And now it's time for a quick break, but stay tuned on 𝐊𝐶𝐿 TV as I'll be back with more trending updates.
Property by 𝐊𝐶𝐿. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐊𝐶𝐿 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐶𝐿.
Hello and welcome back to The Last Trade. You're watching the market close commentary for today. I'm Holly, your host of this show. Let's now have a look at some more companies that remained in the news today. While shares of mining and exploration firm IGO rose 2.7% to $9.78 after it declared a record final dividend, following the report of a solid growth in annual earnings. For the financial year 21, the profit after tax jumped to a record 254%, and revenue rose by 3%, while underlying EBITDA climbed 3% as well. Boosted by strong earnings, the company declared a fully franked final dividend of 10 cents a share. And meanwhile, shares of Bubs Australia tumbled as much as 7.15% to 39 cents after the infant nutrition and dairy business reported disappointing annual earnings. The company posted a loss before tax of $77.8 million in the financial year 21, compared to $16.1 million of losses in financial year 2020, as impacted by the COVID-19 disruptions. The EBITDA loss nosedived in the period as the gross margin decreased to $7.3 million of losses, primarily due to $12.6 million in inventory write-off and the decision to sell excess bulk powder inventory at a loss in light of the pandemic. And shares of online retailer Cettire rallied as much as 12.64% to hit an intraday high of $2.85 after it reported strong annual earnings and upgraded guidance for the next fiscal. The company's gross revenue surged 333% year on year in the financial year 21, while sales revenue jumped 304%. The operating cash flow rose 131%, which was driven by the company's exceptional sales growth, capital-light business model, and attractive working capital profile. The company's active customers soared 285% to just over 114,000. And Australia's leading retailer Harvey Norman shares dropped 5.5% to $5.25 despite delivering solid annual earnings. The profit after tax grew by 75.1% and the EBITDA rose as well 54.2%. Meanwhile, shares of Westpac Banking Corp dropped 0.8% to 25.60 after Australia's Big Four lender completed the sale of its lender mortgage insurance business. The bank had sold insurance businesses to Arch Capital Group and entered into a 10-year supply agreement with the company. In March this year, the bank had signed a deal for the sale of Westpac Lenders Mortgage Insurance to Arch. The sales value of the transaction was around $350 million, and added 7 basis points to Westpac's Common Equity Tier 1 capital ratio. Next up, travel business Webjet shares gained as much as 4.9% to $5.77 after it released a positive trade update. The company claimed that it'll be cash flow positive in the first half of financial year 22, as its post-COVID strategy is delivering results. According to the company, its web beds B2B business has been profitable in July and August and is well on track to maintain momentum in September. With an ease in travel restrictions in North America and Europe, it's seen a significant upside as more international markets reopen. Meanwhile, shares of residential goods aged care provider Regis Healthcare rallied 9.13% to $2.15 after it announced its financial year 21 results. The company posted $19.9 million net profit for financial year 21 over a loss of $0.7 million in the previous fiscal. It generated a net operating cash flow of $105 million and declared a 50% fully franked final dividend of 4.63 cents per ordinary share. Now it's time for another quick break on 𝐊𝐴𝐿 TV, but stay tuned as I'll be right back with more trending updates.
Hi there, James Preston for 𝐊𝐿 TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. 𝐊𝐿⁠'s Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on The Tech Beat, exclusive to 𝐊𝐿 TV.
Hello and welcome back to The Last Trade. You're watching today's market close commentary. Now in our next segment, a look east towards the Asian market performance. Shares in the Asia-Pacific region were trading mostly lower today as undermining firm cues from Wall Street, and investors reacted to China's macro data. While China's factory activity expanded at a slower pace in August, the services sector slumped into contraction, indicating the economy remained under pressure. Adding to the woes, investors also turned jittery amid reports that Beijing is mulling the new rules to restrict domestic tech companies to launch the public offerings in the US. And way down by weak macro data, mainland Chinese stocks were trading lower, with the Shanghai Composite falling 0.75% and the Shenzhen Composite nosediving as well 1.7%. Hong Kong's Hang Seng was the worst performer in the region, with a 1.4% loss on concerns of regulatory crackdowns on Chinese tech companies. And the Straits Times Index in Singapore was also trading 1.3% lower. In a similar trend, Indonesia's Jakarta Stock Exchange dropped 0.3%, and Taiwan's weighted index fell 0.7% as well. Although bucking the trend, Japan's Nikkei rallied 1.2% and South Korea's Kospi gained over 1%, and India's Sensex BSE also surged 0.3%. Moving on to the US markets now, and Wall Street ended higher in the overnight trades as sentiment remained upbeat after Fed Chair Jerome Powell said the central bank was not in a hurry to raise interest rates. He also downplayed inflation concerns, saying that there was no need for overreaction. The S&P 500 climbed 0.45% and the Nasdaq stormed 0.9% higher. The Dow Jones ended marginally lower by 0.15%. Now to the last segment of the show, let's have a quick look at the crypto market performance. While the major cryptocurrencies were trading mostly lower during the Asian trades today, barring Ether, as trading momentum remains weak amidst overbought conditions. Only adding to that, negative comments by renowned people also drag the digital coins. Billionaire hedge fund manager John Paulson said that there is no intrinsic value attached to cryptocurrencies except for a limited amount. He said that the entire sentiment is too volatile and that Bitcoin went from 5,000 to 45,000 within a short period. The price of Bitcoin, the world's largest crypto by market cap, was down nearly 2%. And meanwhile, Ether, the world's second largest crypto, rose an equal 2% as well. Among others, Cardano, the third largest crypto by market cap, fell over 1%, and Dogecoin, Stellar, Litecoin also witnessed selling pressure. Well, that's a wrap for now in the last trade. We'll be back tomorrow at 9:30 a.m. with our first show, The Morning Outlook, to discuss the pre-market conditions. Stay safe and goodbye. Holly Shields signing off.